You're watching Stockwatch. I'm Zinata Guma, and joining me to unpack your stock-related questions today are Jean Pierre Verster from Protea Capital Management and Ricus from PSG Hole in One Ruimsig. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag Stockwatch. Thank you so much for your time, gents. A great day on the markets, but is it great considering the losses that we've seen over the last week, Ricus?
Yeah, it's certainly a bit of a rally on, not only in our markets, but globally as well. There seems to be a perception, specifically on the global markets, that Trump might be willing to roll back some of his tariffs before implementation, or at least softening his stance. And obviously, locally, we had the discussions surrounding the GNU, and you could actually see it in the rand and the market itself, as it became clear that the GNU as is still ongoing. So we had an immediate strengthening of rand, and also a further blip up in the market itself during that news conference.
All right. Well, as much as we are seeing gains, but still not enough to wipe out all the losses that we had seen. I know it might be too early to say at this point, JP, if this will be a sustained rally. But yeah, how are you looking at it? Could this be a dead cat bounce, or can we actually start to see kind of the markets shrugging off and bottoming out at this point?
Zanati, the answer to your question is worth millions. It is the key question for the short term, but unfortunately, it's an impossible question to answer. It all depends on what Trump is going to do next, and that is highly uncertain. Even day to day, it sounds like and seems like he's adjusting his negotiation strategy. I've read quite a bit about the whole tariff thing about the weekend, and it's clear that there are certain global imbalances that Trump understands and wants to address. The way he's going about it is a bit like a bull in a china shop, but the ultimate intent does have some strategic merit. So if you sort of ignore how's he going to do exactly what he wants to do, and you focus on what he wants to do, and that is effectively to decrease the deficits in the US, both the trade deficit and the fiscal deficit. And that would put America in a firmer financial position, and that could delay the change in the leading global power moving from the US to China. And if you want more about that, there's a very good book that has been written by Ray Dalio, The Changing World Order, which speaks to this cycle that's going on, this time in history we are at the moment, which is a point in time which is very similar to previous points in time, when England was a world power, when Spain was a world power, when France was a world power. And I would suggest, if you want to know if this is the end of the fall in markets or not, that you read that book from Ray Dalio. You understand the bigger picture that Trump, what he's trying to do.
Yeah.
And if he is successful, then I think ultimately markets will trend higher, but it depends on how much porcelain is going to break in the China shop as he throws his weight around.
Yeah, as he has said that sometimes you need to give medicine to fix something. But yeah, we will see how things play out in the next few months. Well, there's a question here, quite an interesting one that I hadn't thought about. What are the tariff implications for Sasol exporting its products from its Lake Charles facility in the USA? Ricus?
Well, I suppose it depends on who you export to and whether they've implemented counter tariffs or not. I can't think of anything else besides that. It's an American product. If they're exporting to China and China's just instituted a 34 or 35% tariff, then obviously it becomes less of a opportune destination for Sasol. So it depends on yeah,
Yeah.
on who it's exporting to and what those tariffs will be.
Yeah, and it would seem like a double whammy, of course, depending on who they're exporting to, but also the fact that the oil market has also been hit. We have seen the oil price near 4-year lows. In fact, even today, Sasol was down 5%, 58 Rand, JP. What,
Yes.
yeah, what does the environment look right now for Sasol? A little bit hostile.
Little bit, very hostile. It's looking bleak for Sasol. I
Yeah.
mean, if the oil price keeps on falling, and let's say the rand strengthens a little bit from the 19 rand 60 where we are at the moment, which might happen again. If you think about the longer term effects of tariffs, it should actually lead to a weakening of the dollar. This dynamic is not good for Sasol. If you have a world recession, less oil use, not good for Sasol. If you have reciprocal tariffs impacting the exports from Lake Charles, not good for Sasol. They've got too much debt. They've got an environmental problem, too high a carbon footprint.
Yeah.
So I think the key question is: does one stay short at these levels, or is it just getting so cheap from an asset point of view, a balance sheet point of view, that you might consider closing your short? And I think if you plug in the spot price of oil, all of a sudden the balance sheet doesn't look so good either. So I think there's enough hostility around to still be negative, Sasol.
Yeah, no, I completely hear you on that. Well, let's take a look at MTN. The viewer says, I sold most of my MTN shares on the 27th of February, but the money was paid into my account on the 4th of March. Do you know if it is regarded as a capital gains tax for the 2024-25 or 2025-26 tax year, Ricus?
Yeah, as I said, Jake will probably know better than me, but last time I did income tax, it's due on the date of the transaction, as JP said. In other words,
Okay.
when it was announced rather than when it lands in your bank account.
Ah, okay. All right. So that would be effective on the 27th of February. And actually just...
Sorry, just...
yes, JP?
If I might add to that, the viewer can ask for a broker's note. That is the actual proof of the transaction. The broker's note will show the date of the transaction. And that is your supporting document when you fill in your tax return that you should use, the broker's note for the transaction. Use that date.
All right. Well, actually, just on that, looking at how the viewer sold most of the MTN shares on the 27th of February, I would imagine that was when we had that big rally after the tariff hikes in Nigeria. Selling most of those stocks of his stake, Ricus, would you say that was a good move at the time?
Well, it was a very happy move because I think everything that you sold before the 2nd of April would be considered a fantastic transaction, considering what markets did afterwards.
Oh, yeah.
We were just talking about the oil price and Sasol, and always remember that MTN's biggest market is Nigeria, and Nigeria gets 90% of its, I think, 90% of its GDP from oil sales. So, just be aware of that if you're dealing in MTN.
Yeah, would it look like at this point that, JP, the easy money's been made on MTN, at least in the short term?
Yes. I don't think it was so easy, though. I think again there was so much hostility around. It's easy to say with the benefit of hindsight, oh, MTN was so cheap when it went down to, I don't know, what did it get down to, in the 50s?
Yeah.
One should definitely have bought it when it went so low, because Nigeria would have definitely had a tariff increase of 50% or more. Much easier to say in hindsight.
Yeah, true.
But again, I think Ricus makes a very good point. There's a lot of indicators that have moved a lot, including the oil price, including a lot of currencies. And what you saw at the last reported result is going to look very different to the next reported result. And your way to change your expectation about how the next reported result of any company will look different to the previous reported result is to plug in these key variables and what they are today relative to what they were either at the last reporting date or the period over which the company reported. And if you do that with certain currency rates and you do that with the oil price, again, a company like Nigeria doesn't look so healthy, and companies exposed to Nigeria don't look so healthy. So I would be cautious about MTN. Maybe we'll say again it was an easy decision at this price to sell.
Yeah.
Only time will tell, but it's always easier in hindsight.
All right. Before we go to break, the viewer's asking what is the present situation with multi-choice? I paid 82 Rand per share. Hold or sell? Ricus, I think it's what's still above 100 at this point.
Yeah, it's not something I follow very closely. That deal still has to push through, and it must definitely push through as far as multi-choice is concerned, because otherwise they're in deep trouble. If it was me, I would be selling that and either sitting on that cash or using it somewhere else. I don't think one needs to add the uncertainty of the deal going through to the existing market uncertainty. But that's just me.
Yeah. All right. Well, I mean, paying 82 Rand a share, so yeah, there's significant gains there. JP, your take?
Look, it's quite a complicated deal in terms of how they the proposed structure, where they just want to put a license in one entity where they will have a minority interest and keep the, call it, rest of the operations in a different entity where they will have the majority interest. And in that way, they fulfill the BE requirements for the ICASA license. So the question is, are the regulators going to accept it? Is the Competition Commission going to accept it? Is ICASA, most importantly, going to accept it? Let's say ICASA doesn't accept it.
Yeah.
What happens then? Because according to the Companies Act and Takeover Regulations, they did go through 35%, and they need to make an offer of the previous highest price paid of the 6 months running up to that breach of the 35% level. So I don't think we've ever had a case where one regulator say that the TRP says you must make an offer, and another regulator, say CASA, says you're not allowed to control this company.
Yeah.
I would think that they would still be forced to make the acquisition, and they might be forced to do then something else immediately thereafter, not to control the entity with the license. So long story short, I do think there's still a high probability of a deal. The timing is a bit uncertain. There might be delays, but given that the offer is significantly higher than the current share price, I wouldn't be too worried to sell. You'll probably just lose some time value of money if there are further delays.
All right. More questions. JP, do you still like Oceana?
It's neither fish or fowl for me. It's I don't know. I think it's okay. I think a lot depends on your catch rates, and with global warming and all kinds of other things going on, the fish aren't swimming where they used to swim. So some catch rates of some companies are down. In the case of Oceana, you also need to keep an eye on the fish meal price and what's happening in Chile, which is a big exporter of fish meal, and that impacts their US operations, which produce fish meal. And they had a bumper year the previous year, and now things have normalized a bit. So again, for me, it's no great shakes. I'm not too worried about Oceana. If I would have had it in my portfolio, I don't. But also, I wouldn't say it's one of my top ideas. So, yeah, so on Oceana.
Okay. They say there are plenty of fish in the sea, but it also depends where you are looking. Sometimes they might not be swimming where you think they are swimming. This is a life philosophy, a life hack, gents. The viewer's also asking, Ricus, I'll come to you with Montauk Renewables. Montauk, you know what I'm talking about. What is your take on that?
Yes. Look, it's usually volatile as far as the share price is concerned, but it's really dependent on what's happening in renewable energy, not only from the physical operations, but also from the trading I forgot the specific name for it, but basically units that they sell in order to two companies in order to offset emissions from those companies. So again, it's first of all a very volatile share price, and it's dependent on what's happening with renewable energy. And considering that they're operating in the States mostly, and with the Trump administration walking away from anything that's got renewable in its name, it's not a market that I would want to be in at the moment. Never, without even taking into account how the company is doing operationally. It's just they're just operating in a very volatile market at the moment.
All right, I hear you on that. Well, let's get into the finance sector. Investec or 91, who looks better as a better medium-term bet? JP.
Interesting. So you've got a bank with a stake in wealth management, Rathbones, that they combined with the previous Investec Wealth, versus an asset manager. And you need to bring in the valuation. And if I think of the two conceptually, I would say that I think 91 is trading at a slightly more attractive valuation, a higher dividend yield. I think Investec has benefited from lower bad debts, and where we are in global markets and economies, we could see potentially some strain on consumers, maybe less strain on high net worth consumers that Investec has in South Africa and the UK, but still. So I don't have a strong preference between the two, but I would have a slight preference for 91 at the current valuations of the two companies.
Slight preference for 91 for JP. On your side, Ricus?
Yeah, similar to JP, and if you just take a look at the price action, they've been 91, that is, been outperforming Investec over the past 5 or 6 months. And given the global situation, yeah, I think 91, I like what they've done as far as the distribution channel is concerned. So, yeah, I would favor 91, but I don't think I'd be interested in either one of the two at current prices.
All right. Well, let's get into hospitality. How come City Lodge is so low? I paid R4.25 a share. Should I hold or sell at a loss? And I think it had actually been holding at that level for quite a long time, but now R3.70, R3.80. Yeah, JP, did you think it would go as low as it has?
Well, it's broadly flatlined now for, I think, 4 years. It's been trading between, call it R3.50 and R4.50. If I just think back, I haven't looked at a graph in a while, for like 4 years now. And it's the hangover of the deeply discounted, deeply dilutory rights issue that they needed to do. Secondly, the fact that occupancies haven't really picked up because they are more exposed to business travel than leisure travel, which the likes of Southern Sun is exposed to, and has shown a stronger recovery since COVID. So yes, I do see that some companies associated with Sun Gaming and HCI have been sniffing around the shareholder register. So there might be some corporate action at some point, who knows? But we also got an update a couple of months ago from City Lodge saying that so far this year, the occupancies haven't picked up.
Yeah.
So it feels like it could flatline for a while still.
Yeah. Yeah, Ricus, do you think that this could be, City Lodge could be a laggard for quite some time?
Operationally, yes, but as JP quite correctly pointed out, the share price is back to where it was in August of 2022. So they've been ranging between current levels and about 555 rand. So if you're a trader, this is where you would be sniffing around, buying at the lower levels. One of the reasons they've been missing out is because they don't have gambling in their portfolio, and certainly if you've had gambling in your hospitality portfolio, that's where the money has been made, and it shows up, as City Lodge says, in occupancy not really recovering yet. So if you want to be in that sector and you take on the risk that there might be legislation coming through as far as gambling is concerned, and you're comfortable with that,
Yeah.
then I wouldn't really be interested much if I want to be in a growth asset. Trading wise, as I said, the range traders will go and say, well, buy at support levels and go and sell at your upper limit of about 525, 550.
Gents, before we get to your stock picks, just talking about the current turmoil in the markets. I mean, that has improved today, but the viewer's asking, what's the best way to benefit from this uncertainty, JP?
The best way is to make sure you have a portfolio of quality companies and then do nothing. That's the best way. And here and there, if you can pick up some more shares of more quality companies that might get irrationally cheap, do that. But don't get scared out of your current holdings if there's nothing wrong with the companies you currently own and their valuations are not ridiculously high. If you own a portfolio of high quality companies, that is the best defense against volatility in the equity market.
All right. And with that, I mean, we know that there are a number of safe havens now that have come out. It's not just gold, even the Japanese yen and all of that. But just specifically with gold, whether gold shares or gold ETFs would be an option to benefit from this uncertainty. And if so, are all gold ETFs the same? Ricus?
I'm not sure, but if you want to be in a gold ETF, make sure that it's backed unit by physical gold. Don't go into a derivative, because I think that's risky. So yeah, if it's backed by physical gold in a vault somewhere, that's the one you've got to go for.
All right. Just checking how much time we have for stock picks. See if I can squeeze in. Okay, no, I can't squeeze in. All right, let's get to your stock picks, gents. To our viewers, there are questions that we did not get to, but of course Simon is back tomorrow, so he will answer those tomorrow. JP, what are you picking tonight?
So Zanati, the rand has weakened a lot, so I almost picked a local stock, but I thought, let me pick an offshore stock that has fallen quite a bit. ASML, I think it's one that a lot of people on the show have chosen before. It's the first time that I'm choosing it. And it's a Dutch company, and they make extreme UV etching equipment. Basically, that it's the machines that manufacture semiconductor chips. And the key here is they are a monopoly. There's no other company that has the technology that they have. So if you really want to make the most advanced chips at 3 microns, which is extremely small, you need a machine made by ASML.
Yeah.
So it doesn't matter if there are tariffs. The whole thing about tariffs is it changes people's choices. You would decide to rather have a local manufacturer than an imported product, for instance. But in the case of a monopoly like ASML, you have no choice. There's only one supplier. So tariffs are not really going to impact them substantially. At the same time, you have another, not quite cold war, but we're getting very close to it. And it is a war based on technology, based on chips and development of these chips. So a lot of money is going to be spent by the US and by China, directly and indirectly, to get their hands on the type of machines that ASML makes. So I can foresee that their machines are going to be in demand, and it might not be directly China that buys them, but maybe it's via Singapore or other countries in between, and ultimately the two big powers in the background will drive demand for ASML's machines.
All right. What are you choosing today, Ricus?
Well, following on from what JP said about quality companies at low prices in uncertain environments, one quick way to do that is to look at a quality company and see how it's performing versus the current market turmoil. If it's outperforming and holding up, you know you're in a company that will, when things turn around and markets go up, will probably outperform as well. If it's outperforming already, one of those is local. It's Advotech, and the other reason I'm doing that is because I am at the moment very wary of any company, whether it be local or offshore, that is reliant on any kind of supply line from a country outside its local environment. ADH will not be affected by tariffs because it's everything is sourced locally, and I've picked it before, and one of the growth areas I really like is what's happening in the East African operations. So yeah, Advotech.
All right. Thank you so much for your time, gents. There is a question here that was asking to explain the Pepco sends out today about the CEO and the shares vested to him. To the viewer, Kobus Porgita from Southern Cross Capital did explain that earlier on, so you can find that interview on our YouTube page. But Simon is back to answer all the other questions tomorrow. Thank you so much for your time, gents. That is all for tonight's Stock Watch. Thanks to our guests, Jean Pierre Verster from Protea Capital Management and Ricus from PSG Hole in One Ruimsig. Up next, The Close. Stay watching.